Good afternoon. Welcome. Thank you for rejoining the annual Financial Services Conference in Brussels. This is the afternoon session. We had a very vibrant set of meetings this morning. This morning we heard from business leaders who set out a fairly positive assessment of the economic backdrop for the second half of this year, and also offered confirmation that governments around the world had really laid out a set of COVID responses that were hugely helpful during the crisis. But also we were reminded we're a long way from being out of the woods yet. Recovery across Europe will not be uniform. We must be very attentive to the parts of the economy that don't bounce back so quickly, or perhaps find it comparatively harder to find finance. And we were talking specifically about some of the smaller and mid-sized non-listed companies in this context. That was also one of the points that was underlined in terms of the next generation EU funding, large amount of money available to invest around Europe, and the important signal of European solidarity this project really sent. The Minister for Finance from Slovenia, who will be taking over the helm of the the ECOFIN agenda for the presidency of the European Union, starting in just 2 weeks' time, gave us his priorities. I mean, clearly he focused the broad outline on the recovery and the exit from the crisis, and concretely on the financial sector agenda. He said that they would be working on the carbon border adjustment mechanism, digital levy, anti-money laundering, counter-terrorist financing work, Basel implementation, Solvency II review, and sustainable finance package, of which we had a session just now. And he also talked about the digital financial services agenda. And it's this latter part that we're going to focus on right now. So I'd like to welcome Lawrence Wintermeyer, Executive Co-Chair of Global Digital Finance. This session, over to you. Thank you very much for moderating and opening this discussion with the panelists.
Well, and thank you, David, and thanks to all of the speakers and panelists for a great morning. And thank you very much for the invitation today. I'm Lawrence Wintermeyer, the Executive Chair of Global Digital Finance, and this is Session 3, Central Bank Digital Currencies, the Future of the Digital Euro. Now, I'm very grateful for being born in the West, in the era that I was born in. And I'm struck by Warren Buffett's account of having won the gene pool, being born in the US, which facilitated and enabled him to do what he had to do in life, and something that he believes wouldn't have been impossible had he been born anywhere else. I was born in Canada and spent most of my adult life in Europe, but as a first-generation gamer and a first-generation coder on microcomputers in my early teens, I consider myself the real first generation of digitalists. And in 1990, when Nicholas Negroponte, the founder of MIT's Media Lab, wrote a book called Being Digital, it described my tribe at the time. We'd spent the previous decade with home computers, and in college, we'd written code for better data management and search, recommendation engines, and rule-based expert systems. Of course, investment management and trading software was my interest, and that's just to name a few. The process of being digital has now been globally superscaled, and innovators can create new digital solutions in small networks of decentralized hubs all around the world. Many entrepreneurs now have the opportunity of creating and competing with new digital products and services and new platforms for capital investment and wealth creation. And in the last 10 years, we've just seen that blossom in Europe and in the community. There are often hundreds of innovative startups competing with heritage sectors and companies, and the most are innovating faster than corporate command and control structures and government policymakers can keep up with. It is a very agile space. And this is analogous to a mounted cavalry on horseback fighting a mechanized cavalry in tanks with support from the air. And now I abhor war, but war analogies are often pithy, and I think we shouldn't make any mistakes here that we're in a global soft war. Economic, trade, IP, products and services, currencies, and digital is a key enabler to master competency in this soft war. Now, several years ago, I had the privilege of being the CEO of Innovate Finance, the UK FinTech Members Association, which was established with the support of the UK government. And our job was to build a UK ecosystem for FinTech. And a key part of that job was providing guidance to policymakers about digital. Now, I continue advising policymakers at Global Digital Finance, which is a not-for-profit advocacy firm focused on standards for the crypto and digital asset sector, and we fulfill a role of stewardship really between industry and policymakers. And my guidance to policymakers still starts with the same message: embrace digital. It's not going to go away. And my enthusiasm for this existential truism hasn't changed in almost the past 50 years. We're in an era where technology has become much easier and less expensive to develop, which is why there are so many innovators. They're building everything from better mousetraps to breathtaking, life-changing innovations. And we all now hold supercomputers in our hands that are connected to the network with smart applications that allow us to program our lives to deliver goods and services as and when we choose. This technology is here, and it's mature enough to do whatever we need CBDCs or a digital euro to do in an efficient, effective, and safe way. The barriers most often to implementing these digital solutions are human: social and systematic biases, poor digital system design capabilities, and often a misplaced understanding of the utility of product and a misunderstanding of what it takes to achieve mass adoption. As importantly, the community of industry innovators is an asset for policymakers and governments. Industry partnerships are the key path to an accelerated, risk-adjusted digital euro being rapidly deployed and developed. Now, central banks must take the opportunity to master digital, and it would appear that most of the world's central banks are now actively investigating CBDCs in some fashion. Digital offers a range of opportunities that central banks can use to help transform society and the economy. And then, following the largest crisis to humanity in a century, central bank digital currencies must be positioned to help build back better over the next decade. From the eventual elimination of paper money, a trend that is already in progress thanks to e-payments and cards, and the opportunity to reduce this mass bearer instrument that is often at the heart of financial and terrorist crime, to a range of benefits including atomic settlement, zero risk exposure, increased resilience and less downtime in the financial system, increased liquidity and enhanced global trade, and programmable money and smarter tax solutions, all of which I know many of you are familiar with. This is really a great opportunity area. Now, there are a number of barriers to overcome with CBDCs, but they may not be as big as they appear. Privacy appears to be the big issue that's quite often cited by the press. But in a world where consumers regularly hand over personal data online to sources that have no provenance, and openly share personal details on public social media, we must challenge ourselves as policymakers and as architects to get this privacy issue into perspective. Web 1.0 and 2.0 design mean that citizens leave a footprint of data, and this is used aggressively through surveillance capitalism by search, social media, and companies seeking to market and sell products. And indeed, consumer banks and credit companies hold much of an individual's profile of consumptive behaviors. CBDCs must take their role to help build Web 3.0. And as long as there is a provenance in the on and off ramps to a CBDC or a digital euro, KYC gateway for citizens who are using CBDCs, all of this can be managed. And citizens need to be in the system and most citizens are in the system, as in the financial system. And this leads to banks who've already done the KYC work. There's an important role for these institutions to play in the development of digital identity, and they must step up to it. The importance of PSD2 to enable a greater pool of participation and competition in the deployment of CBDCs through the innovative fintech community must be ensured through this and on a level playing field. In a soft war, as in any war, reaction time is a factor. And from governments printing record amounts of money to help to accelerate the recovery of the pandemic, to wholesale digital transformation of the financial and capital markets infrastructure that's currently underway, the implementation of a digital euro is at a moment of truth for the European Central Bank. In July, the ECB will decide whether to proceed with the creation and distribution of a digital euro, an electronic form of bank money accessible to all citizens and all firms. To discuss this and the digital euro, I'm delighted to be joined today by four esteemed panelists. Danuta Hübner is a member of European Parliament. Ulrich Bindseil is the Director General of Market Infrastructure and Payments for the European Central Bank. Javier Pérez-Tasso is the CEO of SWIFT. And Paolo Bertoluzzo is the CEO of Nexi. I'd like to welcome all of our guests who are going to give opening remarks. And can I hand over to Danuta Hübner from the European Parliament to start us off today? And I note, Danuta, that you need to leave at 1 o'clock, so we'll make sure that we get any questions fielded before you leave. Danuta?
Thank you, Lawrence, very much. And I thank you also for what you have said in your introductory remarks, because I think I fully share your view that technology is actually revolutionizing the way we are carrying out our everyday lives. And that actually, if you look at the financial sector, we probably lived the most transformational period of the modern history of finance. I know that it's quite a suicidal mission to speak about the central bank digital currency right before Ulrich Bindseil, who knows everything, but I hope he will just correct my dreams or how I see the future. I think that we all agree that digital acceleration is occurring at an unprecedented speed, and changes to the way we do business, we communicate, we transact are occurring as we speak. And of course, even if when finance becomes digital, it is still a finance and risks are still there. So digital innovation, I think, requires a lot of good investment in technology and skills, but it also needs an adequate regulatory framework. And I think that we must admit that technological developments we see in financial sector have not been envisaged by majority of the existing regulatory framework, and we have in many instances there is also lack of clarity on how existing framework applies to innovative business models and processes that are occurring. But I also hope that you would agree with me that the European Union has embraced this digital transformation proactively, while aiming at mitigating also any potential risks. And I also think that, as it seems broadly recognized that the future of finance is indeed digital, it seems absolutely justified to look at the digital euro efforts in the context of this digital transformation in finance. And that's why I think we should add to this notion, which is a buzzword today, which is resilience. We should add to it also the digital operational resilience. I would also say that in this emerging reality, we see a profound shift in payment preferences, where citizens are turning more and more towards digital payment solutions and away from cash, and digitization basically is an encompassing phenomenon. And this started way before, well before pandemics, and today we see more of it, and we will most likely see even more of it. And digital euro is primarily, I think, driven by this trend to respond to the needs of citizens, but also to make the euro as European currency also fit for the digital age. When ECB announced that it intended to begin considering the creation of its own digital currency or digital euro, it was in October 2020. We had Mr. Panetta more or less at that time in the parliament, and my understanding has been that it came in reaction to this changing payment landscape, first of all. But I would also say that it also came as response to the initiatives of other central banks, which have been developing their own digital currencies for years. And I also want to believe that it comes in response to the digital money innovations. So what's going on in the market? And I would say that to a certain extent, the EU has found itself under pressure, I would say, to enter the space of digital currency. There is this unprecedented geopolitical context here today, and we can see many jurisdictions moving toward digital currency. And it's also true that some are doing it more swiftly than others, and those ahead are not necessarily famous for their democratic regimes. And this is, of course, adding to concerns that the Eurozone could lose control of its money supply. European institutions, therefore, have become concerned about external threats to their monetary sovereignty in this geopolitical context. And when I look around, I would risk saying that Europe is, for me, relatively a latecomer to this trend, and I would be very happy to hear that I am wrong. And I think it is also legitimate to ask why we started a bit later than other jurisdictions. I'm talking about starting the whole project, which will last for some time. And if you look in this context at the global competition actually between central banks which are racing toward the central bank digital currency, I think this competition is increasing, and China, which started in 2013, I think is today the furthest ahead. Russia plans to launch a pilot beginning next year. We understand that Bank of Japan has started also trials, and of course Bahamas and dollar is already since October with us. But Sweden has been also working since 2017, and now actually I understand they completed a pilot. In the UK there is a task force, which is also a good news. And also my understanding is that for US the introduction of the Cbdc is a high priority, and I think they are under strong political pressure to adopt their own digital currency, and Fed actually looks now at different technologies. So I'm saying that just to underline that all major central banks and hence probably of smaller ones have been examining all the options of digital currencies with seriousness on how to provide a digital equivalent of official cash. So I think that in addition to all our internal European concerns and things to do, it is, I think, absolutely justified to look at this process also from the point of view of the entire international financial system. And that certainly implies a lot of cooperation, involvement of global institutions. So the question is, which I would like at this stage to ask, is whether we might really come too late with digital euro as Europe in the context of this global situation, or we can benefit from the moment we come. And if you look at public reflection of recent months, on digital euro. It focuses, of course, on benefits, and some people point to disadvantages. But there is this big question on how to do it in a way that would also ensure like long-term competitiveness of Europe, European economy, European financial sector as well. In short, I am of the view that ECB initiative deserves very strong support. I think it is clear that there are related issues which require utmost attention. I think it is not enough to say what we hear, that it is just about complementing and not replacing cash or payment solutions offered by the private sectors. Potential risks for banks have to be understood, I think identified, understood, and also addressed. I also think that digital euro can more or less fundamentally affect the role of ECB, of private banks, of non-bank service providers in the financial system, the payment system, the credit allocations, the financial stability safeguards. So there is a lot of things also for ECB to look at, which I'm 100% sure they are doing. But it takes time as well. So I understand that digital euro will be about a fully protected central bank account, and it is not hard to imagine that in time of financial turmoil, a large-scale withdrawal of cash from bank accounts with an aim to put it into this certain central bank account can take place, and this would, with digital currency, this can happen much faster than it can happen also today. Also, some in this public debate, some point to the unintended discrimination against vulnerable groups of consumers. Others talk rather about the opposite, meaning benefits for those who are currently underserved by the banking sector. So this financial inclusion, I think, is an important argument to look at, and I think people look at it definitely. I understand that the ECB decision to proceed is still imminent, and there is this roadmap, informal or what we can see, that it can take some years. Actually, what we have heard for the time being from ECB, that it might be up to, and from what Christine Lagarde herself said, that it might be still around 5 years to have a fully fledged central bank digital euro, and we don't know what will be the specificities, and this we know only the results of the ECB public consultation, which are extremely useful, I think, in this context. They are important because I think that ECB is very clear that any form of the central bank money should respond to the needs of general public, and I appreciate very much this approach, and I also think that for all the participants in the public consultation, the most important features of this new payment possibility is privacy, security, and but also broad usability. Where I don't know exactly where is the position of ECB at this stage of this broad usability of the new of the digital euro. So I think that these concerns, we can elaborate in the questions more about what citizens expect, but I think that the challenge is also to avoid situations where central banks can become competitors of retail banks in offering payment services to the public. So for this context, how to understand level playing field and how to ensure it is also a big open issue. We certainly have to avoid that the digital euro will crowd out private solutions or discourage new innovative initiatives in the payment market. So I understand ECB says to us each time we talk that the cash will stay and nobody will be forced to choose the central bank account. Still, retail banks must be prepared for this possibility or possibly a bit modified role. But the important thing is that we don't see the destabilization of the financial system by draining commercial bank deposits in unpredictable ways. That's also very important. I also understand that there is a big issue which I hope ECB is also taking into account is should we have any threshold for the size of the accounts of digital euros, and what kind of incentives we could have for this threshold to be respected. Another thing is certainly the big issue which was not understood or addressed by the public consultation is, of course, any impact, potential impact on the powers of central bank, or the impact on monetary policy. These are the traditional concerns that we in the parliament have for this type of action. And I think the issue, this impact on central bank, has been especially prominently described in public media in the context of the Chinese digital currency process. But this issue of, which I mentioned before, but I would like to repeat it in a slightly different context, this issue of considering the role that a digital euro could play with a view to strengthen the global appeal of the euro is also for us extremely important, and that implies this possibility of cross-border use of digital euro. I think this is very important and very key. While my impression is that what we see from central bank is more focusing on the digital euro in the context of the euro system. So maybe to start with, but we have to remember that single market is a multi-currency area, that even in the banking union, we have today also 2 member states that do not have yet a euro. So I think interoperability of the whole system will be extremely important. And the global appeal of currencies, of course, depends on sort of certain fundamentals when it comes to the economy. And I think digitalization will not change those fundamentals which decide on the strengths of the also currency in the international context. But characteristics, I think, that are specific to digital means of payments, like safety, low transaction costs, or bundling effects, they can also promote the international usage of currency. So here we have hope. And as an author of the report on strengthening the international role of euro, I count very much also that this issue will be also taken into account. So this multi-currency wholesale digital euro solution is I think, something that we should aim at. And what I think is important, and I would like to maybe finish with this, that we have to sort of, when preparing for the digital euro, we have to also realize that beyond the digital euro, there is also a market reality that we should not ignore. And I think here especially of decentralized finance movement and all its products. We have observed tremendous growth in the area of digital money. And I'm not talking about the negative examples, which we can always find, but about those systemically safe. And currently, I think the decentralized finance industry can rely only basically on the US dollar stable coins to manage risk. And there's no European alternative, no significant euro stable coins on public blockchains. And those, I think, who know the market, they say that basically more than 99% of stable coins used across the ecosystem are anchored in American currency with a guarantee of exchange it into dollar. And this might signal for us also in the future a huge dependency on American currency. So I really hope that all those stable coins that reference the fiat currency using either centralized or decentralized means are, I think, generating enormous amount of activity and innovation, and the US has taken the lead in this domain definitely. So I think that there is a risk of another missed European opportunity in the digital transition, and we need, I think, as Europe, a very clear and unified vision for this digital money innovation that takes in particular the form of privately issued digital representation of euros, so that companies using the crypto assets don't have to rely on US dollar, which means that Europe's innovation potential is simply underused. So my last sentence here is that I believe that in Europe, a shared public-private vision on digital money, where both the central bank digital currency, Europe ECB digital euro, that has started already its path, I want to believe, toward future, and privately issued digital representations of euro that do not pose a risk to monetary sovereignty, can and should work together to make euro as a currency more competitive and welcomed internationally, which I think is important for the years to come, will be an important challenge for Europe. Thank you.
Thank you very much, Danuta, for that comprehensive overview of the digital euro. And in fact, I think we have time for one question, but I propose that rather than asking you the question, maybe I can throw to the panelists the question and start with Ulrich, who's next. Your key question is, are we too late with the digital euro? And Ulrich, I'm wondering whether you might want to answer that, and as well whether we could go to the industry panelists for a quick response before we kick off with your presentation.
Yeah, thank you, Lawrence, and thank you, Danuta, indeed, for all the things you said, which were all, completely reasonable points that need clarification, further clarification. On whether we are too late, I would say first, the mood towards digital central bank currencies has really changed over the last 2 years. So a few years ago, still, central banks in general were very defensive. I mean, the case of Sweden in the Western world is a bit unique because they were so much ahead of digitalization of payments. It didn't come so much to the mind of others that work on this is needed. The mood has changed. So now, it all depends on how committed we are and how sure we are that we want it and how we want it. Because both you and Lawrence mentioned many, dimensions which could be included in a digital euro, but which would also make sure, that it takes 10 years at least to, be ready to have it. So we have to, make up our mind on the scope we want for an initial euro, and then be focused, and then we can deliver this in 5 years. But even the 5 years, is nothing that can be taken for granted, because there are many deep issues here, not only on functional scope, but also in collaboration with the EU legislator, really. There are lots of things which affect the citizens, which affect the policies that, the Commission, the Parliament has views on. So we have to interact. It's complicated in terms of getting the interaction very efficient, define the scope, work it out. If we do it very well, we can do it in 5 years, and then we are good in time, I think. The others will not come earlier than this, except China, indeed.
To the other panelists, would anyone care to answer, or are we too late with the digital euro?
I'm happy to comment, Lawrence. Well, my view first, and I will echo what Ulrich just said. I don't think this is a race. So it's about laying out the groundwork and thinking that through thoroughly through all angles. If I think about my perspective, looking at the infrastructure viewpoint and all the right components there, if I'm speaking directly about the euro, I think, in fact, it is quite well placed. Not talking about the initiatives that are already on the floor, that I completely agree with Danuta, that there's been some great progress in some countries, but the euro is quite well placed because there are great payment solutions in place already following SEPA, the single euro payments area, and the great work done by the ECB for many years now on the whole euro system, and obviously now with ESMIC, with Target 2 and TIPS and Target 2 securities and so forth. Also very important, we'll talk about it later, about the right foundations being put in terms of data with the adoption of ISO 222 standards that are going to be triggered and actually adopted earlier than ever anywhere in the world here in Europe, again driven by the ECB. I think the paper that also the ECB published on the digital euro is an excellent one, going through all the angles to be considered. And maybe I'll end with a point that is anyway close to our hearts, because we thinking a bit holistically and the internationalization of digital currencies. Danuta touched on a very important point, which is the interoperability. And I do think that this needs to be thought through before launching the initiative. It's about, at the end, to adopt it at a global scale and to do so with all the right controls in place in terms of KYC, fraud monitoring, and liquidity management and so forth. So anyway, all that to say that I don't think it is a race, and I think it is very important to think about all the angles. And from my perspective, I see Europe very well placed.
Paolo, last word on whether it's too late before Danuta has to leave the panel.
No, it was pleasure listening to you. I just listened still if I can 2 minutes, yes.
Listen, Lawrence, I think that at the end of the day, being too late or not, the answer, the conclusion, the so what doesn't really change. We need to run. I think if we are late, we need to run. If we are not late, we need to run, because it is moving very fast around the world, with the private sector, with central banks, and there are very strong reasons why this is happening. I think the geopolitical reasons behind all of this have been already explained very well at the beginning of this session. I think as Europe, and obviously my angle is the angle of a private company that is active in digital payments in Italy and more across Europe, is that it's really urgent that we start to think about the use cases. I mean, what's in for it for European citizens, for European businesses, for the European people? Because I think the concept of digital euro is incredibly powerful to unite Europe and give a sense to it. But my perception, and we can go deeper into it, is that so far this is really pushed by the institutions for very good geopolitical reasons. But I think when it comes to the benefit for the public, the benefit for the industries, the benefit for the small businesses of Europe, I think the discussion still has to start. And I think this is really important. That's maybe where Europe can make a difference, and maybe recover some of the delay in case there is a delay. And I think that is incredibly important to join forces, institutions and private companies, because it's only by the combination of these two components that we can really combine the geopolitical need for this and the customer benefit and the innovation behind it. Otherwise, at some point, the citizens will say, why are we complicating all this? I'm happy with my cash. I'm happy with the digital payments I already have. Why do I need this? And I think instead there is a huge amount of value that we can create, but we need to work together.
Yeah, it's a very good point. And then Danuta, I'd remind you in Peter Thiel's remarks, quite often it's not the first entrant, it's the last entrant. So okay. Google came much later than Alta Vista or Yahoo, and Facebook came much later than MySpace. So you need to pay attention on this one.
Yeah.
Thank you very much.
Thank you for the invitation very much. All the best to you.
Thank you. Greatly appreciated. We're going to move over to Ulrich at the ECB to round off the policymaker opening statements, and then we'll move to our other panelists for an industry response before general questions. The question stream is open to delegates. If you would like to ask questions, please send them through. We'll do our best to get them answered. And then could I ask my esteemed panelists if we could try to keep the opening remarks to 5 to 6 minutes in order to get to the questions in the plenary? Be very grateful. Without further ado, Ulrich, can I hand over to you, please?
Yeah, thank you. And I have a presentation, and I will try to squeeze it, and many useful things have been said already. So if we move straight to the next slide, please. Yeah, so the digital euro, according to this report of October 2020, is obviously digital central bank money available to citizens and firms, and serving both. And an important message was it complements and does not substitute cash. So we are not, pushing out cash. We have no objectives with the digital euro that have anything to do with getting rid of cash. There are some such objectives, but the ECB and other central banks do not, endorse those objectives. And secondly, synergies with the industry. Throughout the report, we emphasize this point. We don't want to crowd out the industry. We know how much expertise the industry has built up. Companies like also the one of Paolo, the banks. We cannot pretend we can, replace all this, and we don't want to. And then the report says digital euro has not been necessary so far. Next slide, please. And there are, however, reasons and scenarios to think that the digital euro will be beneficial. So question, what is in for citizens? Why do we need this? So we have a general digitalization trend of the economy. Lawrence, you have explained this very well, and payments also become digital. So a central bank who should serve the real economy, which would stick with cash only, with paper banknotes only, a kind of 18th century technology, would probably miss something going on. And in the area of payment, we observe this trend. We are not where Sweden is, but there is a clear trend which can accelerate, and it is likely to continue. There's no reason to doubt on this. So once, let's say, people would not like to use cash any longer, let's say shops would not like to accept cash, then we have an issue here, because we would fully rely then on digital solutions, which are only private. And this has two issues. First, this is always a market with network effects where few players easily dominate the market. And it is in the interest of citizens and firms that they can fall back on a public payment solution where prices are not set in a way to exploit market power. In addition to that general issue, we have in Europe the sovereignty concerns, namely that the most successful companies in the retail payment market, at least at some layers, are foreign companies. That is a trend that has been there for quite some years. And in addition, then the anticipation of policymakers of stable coins entering the market was enough to make this sovereignty concerns issue prominent. And indeed, payments is a key activity of society, and it's not a good place to fully rely on foreign companies only. Of course, foreign companies have grabbed quite a market share because they offered good products, and they should continue to do so. But if, let's say, the European role in this crucial market declines further and further, then we have a problem, and therefore we need to be prepared with digital euro as well. Next slide, please. So a very interesting question is the one of the functional scope, and both you, Lawrence, and Danuta, and also Paolo, you have all made reference to certain things which should be in scope and which make the digital euro a great, comprehensive game changer. But at the same time, we have to be humble. I mean, we have to admit that probably, a digital euro makes only sense if it is at the point of sale and in e-commerce and for person-to-person payments. I mean, none of those, I cannot imagine a digital euro which would not cover those points at least, no? And those points, delivering on them within 5 years is not trivial. You have to really, set up this integration with industry solutions. You have the legislation, the interaction with the policymakers. You have to define exactly the scope, the technical solution, and implement them. So this, even if we keep the scope really limited to POI and P2P payments, we have a big job for 5 years, no? So then people, come and they want to assign a lot of other issues to digital euro, saying that, if the digital euro comes, at least it should also address this and that, which is, a long-standing issues. Example, international payments. I mean, the G20 is currently very active on cross-border payments, and there are many avenues. And Javier, SWIFT is also bringing important contributions in this field of getting cross-border payments better. So those are endeavors, for many years people have worked on it. The industry has worked on it with energy. So we should not, say also the digital euro will within 5 years provide here a breakthrough, maybe, but not on everything at once. That's really the challenge. And the same relates to programmability. Programmability sounds good, and there are good reasons, for automated payments, and you have to find a technology which allows it. And people have been thinking through this, but it's not very advanced in terms of private sector solutions. So let's see what we can put into scope here. But again, let's not underestimate the project. If we want to deliver on the very core, which you cannot imagine to be missed in the first version of the digital euro, then those are add-ons, and we have to be careful. We have to be sure that we can manage a project which encompasses all those elements. As much as we can do is good, but let's also keep in our mind the project risk and the project timeline. Next slide. So and the technology, there are different, basic questions here, like account-based versus token or bearer-based, programmability, online versus offline, and again, the very core, the POI payments and person-to-person payment solutions, which are currently out, they are all account-based and online, basically. No, offline is challenging. Bearer-based without a central account somewhere is less obvious. It's not very well tested. So, and programmability the same. So we are open, and the investigation phase of the project will look into this. Nothing is excluded, but let's at least admit that well tested and deployed, and that's what is on the left side here, an account-based system. And here we mentioned tips. We have experience with that in terms of instant payments between banks in tips. So we have some technology that one could imagine to be scaled towards an account-based digital euro. Next slide, please. And we want it really to be a complement to private initiatives. Just to mention that briefly, it's a payment, retail payment and industry payments is a huge market. There's enough space for coexistence and what I call here constructive competition between private and public means of payment. When banknote usage goes down, automatically the digital payment market grows further, and therefore the central bank entering this market does not necessarily crowd out anyone, because the volumes will increase with the digitalization of payments. And the private sector will remain more innovative, and we have no ambition to crowd out the customer relationship of banks, and neither the balance sheet of banks. And we need some safeguards. We need to take that into account in the functionality. One example is, we live in a currency area where risk-free digital investments have a yield of minus 60 basis points. So we cannot offer a digital euro at 0% with unlimited access. No, it's just not possible, unfortunately. So we have to build in something, be it, a tiered remuneration where citizens have the right to hold a few thousand euro at 0%. But the big volumes, can only come at a remuneration rate consistent with monetary policy, unfortunately. Hopefully in 5 years, we may have a normalization of the interest rate structure, and maybe we don't need negative rates anywhere in the digital euro, but under current conditions, we would need it. Next slide, please. There are lots of decisions. Let me not go into the detail. I don't have the time. One fascinating topic is maybe that where the digital euro or central bank digital currencies have a competitive advantage really is a store of value, no? Because we can offer a completely risk-free asset, but there we don't want to use this comparative advantage. We don't want investment flows into central bank digital currencies. We want to enter the market in a field where we don't have a comparative advantage, which is a payment, no? Because we believe citizens must be able to fall back on the public payment means if cash would no longer be, attractive for them. So this is interesting, no? That on the side of payments, because of network externalities, it's not so easy, to target a certain market share. This will be an interesting question. Okay, let me go on. I have to stop soon. So next slide. Yeah, what are the next steps? So we have done some work, of course, between October last year and now. So just to mention, we have done a public consultation where privacy came out as an important feature mentioned by Danuta earlier. We have done conceptual work. We have prepared the project basically for a decision. We have done experimentation with technology, so hardware devices, DLT elements, scaling tips, all those things we experimented on. And then, in July, the Governing Council could decide starting an investigation phase. That's not a decision to issue the digital euro. It's only the decision to investigate. And it's the first of our key project phases. After an investigation phase, the Council could decide for a development phase, which would mean, you implement the code, the solutions. And the decision to really issue is still a third decision, no? There has not been a decision to issue yet. Okay, thank you. Let me stop here.
Thank you very much, Ulrich. Can I now hand over to Javier to start the industry opening remarks, please?
Yeah. Yes, thank you, Lawrence. And yes, this topic of CBDCs is clearly very close to our hearts at SWIFT. So thank you again for inviting us to the panel here today. So maybe starting very briefly with a bit of context about SWIFT, even if I think the audience knows who we are and what we do. But basically, in a nutshell, SWIFT is used by 11,000 plus institutions in more than 200 countries. The key purpose is to provide international transactions and to interoperate across several business lines, trade finance, FX, and of course, securities and payments. Talking about payments, of course, the challenges of speed and efficiency in international payments, already mentioned by Danuta and Ulrich, are often talked about. And from that perspective, SWIFT and the industry have put a major focus on enhancing cross-border payments. Over the past 5 years, we've focused on improving that service that banks offer to their end customers, consumers, corporate clients, institutional clients, by bringing correspondent banking and cross-border payments to the next level. And that with GPI, with the initiative, essentially making payments more efficient in terms of cost, speed, and transparency, and allowing banks to track all payments across the SWIFT ecosystem, and that all payments, so that's very important, reach end beneficiary account within 24 hours. Fast forward now into today, in practice, we are seeing that actually 2/3 of all international payments reach end beneficiary accounts within 30 minutes. Almost half of all payments are delivered and sent to beneficiaries in 5 minutes, and many of them in just seconds. As I said, not just the recipient, but the beneficiary customers. And to the point of Ulrich, so I think it's an important background and context to put in place is that the industry has not stopped. The global industry has not stopped in terms of innovation, both at the domestic and international level, both at the back-end infrastructure and the front end. Indeed, Lawrence, you mentioned leveraging open banking and PSD2, for example, in Europe in terms of regulations. But we are in a very strong position now to move to the next level. So while indeed there is a great momentum, we see also at SWIFT that the situation where we are today is just part of the journey. Just 9 months ago, we issued our new strategy at SWIFT, which is about building on that and taking correspondent banking, international payments to the next level to achieve truly end-to-end, account-to-account, instant and frictionless transactions across the world, making essentially international payments as seamless as domestic ones. So we're talking, just to round it up, a figure of 4 billion accounts globally interconnected. And that through, in our case, a next generation digital platform that will use APIs and cloud technology. It will be based on ISO 222, as I mentioned, very important move that, as I said, the ECB is one of the leading central banks in terms of adopting it at their RTGS level with Target 2 in November 2022. And that providing, because that will provide a common language for payments that can be adopted across the world for domestic and international systems. And that's totally it's super important because it's not only for wholesale, but also retail payments. And as importantly, currency agnostic. And I will come back to that because when we talk about CBDCs, it is crucial that whatever platform is created can carry all sorts of assets, whether it is fiat or digital currencies. So that rich end-to-end data capabilities in our case, I think, enables something that is as important as speed, which is the whole friction in the system by enabling pre-validation of essential data, fraud detection, data analytics, transaction tracking, digital identity. I think a very important point that Danuta mentioned that is crucial for the future, and exception case management. So that will also help the fact that we have new technologies across the world, such as AI or machine learning, that can provide strong data insights and essentially this intelligence to interpret data and to enrich it and define it. So taking all of that into consideration, then what is the potential impact of digital currencies from my perspective and for the financial industry? Again, Ulrich elaborated extremely well on it in case of the digital euro. And my perception is obviously that the attention of CBDCs is a natural development of digitalization. It makes total sense for central banks to evaluate future models. As an infrastructure provider, in our case, it is not for me to give an opinion whether central banks should or shouldn't issue them, but rather, as I said earlier, to build the infrastructure for that to work. And when or if it gets introduced, so that innovation has the most beneficial impact on payments globally, whether transactions are happening, as I said, in euros, dollars, renminbi, or any form of digital currency. So I think in terms of advantages, of course, the big attraction of digital currencies maybe is that they combine the exchange of value and its settlement in one digital process, and that is definitely an asset. And while it is very promising, I mean, we've also issued a paper recently with Accenture from a Swift perspective. It doesn't necessarily solve for all the friction points that payments actually have. So just to mention a few, we need to take into account operating hours, especially as you go east against the sun. If the receiving country is closed and then therefore payments are held up. There are legacy banking systems, a little bit in different countries, whether they are emerging or mature, that is across the board. And although we're seeing progress in the move from batch processing to real-time operations, it is still something to take into account. One important building block also that, by the way, I give credit to the work done by FSB and CPMI on assessing all the building blocks that need to be overcome to achieve truly instant, frictionless, and inclusive payments and transparent across the board. But another important one is the local currency controls in the receiving country. Obviously, they are a matter of economic policy, but the way they are implemented is a major factor in slowing international payments. And there are, of course, different data requirements between jurisdictions. And some of the friction is around financial crime compliance practices. Maybe a couple of points before I close is that it's important to see that all international payments have a domestic MI leg, so that's why it is important that the domestic bit is implemented and worked through. But unless everyone is going to hold every currency, someone will have to do the FX and the bridge between jurisdictions. Currently, that is the role that correspondent banks occupy, and how that evolves in CBDCs remains to be seen. But it's clear that it is needed that regardless of the technology, standard, and protocol used, there can be global interoperability. That again, the point of Danuta. Maybe also, Ulrich mentioned that like many other companies across the world, at Swift also we are experimenting with CBDCs and with digital currencies. And two very important points to look at is how we might facilitate interoperability between token-based and account-based networks, as mentioned, and how we could also potentially facilitate interoperability between CBDC networks and other value, so currency, securities, networks that are on different technologies. Maybe I'll pause there saying that while innovation is fundamental, I think it is super crucial that we innovate responsibly. Then coming back to the point about it's not about a race, it's about doing it right. And there is where we need to keep the foundations on risk and controls around financial crime compliance and cybersecurity firmly in place. So CBDCs will need to be based on core payment system requirements such as fraud prevention, KYC, AML, transparency, data privacy, enabled, of course, by data-rich standards, especially 2022, digital identity to combat fraud, and of course, interoperability with all these systems that also require FX mechanisms that are scalable and interchangeable. So that's my comments here. It's really about all the different parties involved taking the time to make sure we use this opportunity. And of course, lasting change is not something that can be achieved by any single institution. I believe both, again, point made by Danuta, both public and private sectors will need to collaborate closely together. And I believe particularly so when it comes to innovation. Thank you.
Thank you very much, Javier, for that. And I'd just like to give a heads up to our viewers that we're likely to run an extra 10 minutes on this panel. When we had our panel briefing, we knew it would be a challenge with the number of esteemed speakers we have to get such an important topic of such gravity with, as all of the speakers have outlined, the details that are necessary to speak about it in the time frame. Paolo, this puts the pressure on you for your opening remarks to squeeze into the next 5 or 6 minutes so that we can allow 10 minutes for Q&A. But last but not least, can I hand over to you, please, Paolo?
Thank you, Lawrence. Again, thank you for inviting us. Actually, as I said before, the angle I have on this debate is not the one of an expert into digital currencies, digital euro, but is the one of a payment company that is actually serving consumers, enterprises, large players, small players, e-commerce, working alongside with 1,000 financial institutions, banks, and also through the combination with SIA in particular, serving and partnering with central institutions on payments-related and infrastructure-related topics as well. Listen, I think in general, when we think about the digital euro, we can only be excited because we are in the space of digital payments, and I personally believe that more digitization and evolution of cash into digital cash, if you want to put it that way, is only positive. I think for citizens, for the society, for the economy, and ultimately also for company such as ours. Sometimes I wonder when we talk about the benefits of the digital euro and the characteristics and all of that, I wonder how much of that is really different or new compared to digital payments. No, and I think this is a key question. I think this is really a key question if you want to respond to what at some point European citizens, hopefully soon, will ask us as public and private institutions in terms of why the digital euro, what is changing for me, for my personal life. And that's the reason why, besides when I hear about inclusion, simplification, security, transparency, robustness, these are all characteristics that are not only there, but must be there in operating the current digital payments infrastructures and network systems. And I think the regulators, the ECB, the national regulators are very, very much right in making sure that this happens already today, well before the digital euro. That's the reason why we are regulated entities, and that's the reason why we invest so much in security, in stability, in reliability, in customer identification controls, and anti-money laundering, and all of that. So I think these characteristics have to be there already, are there already. So I think the key question is what is going to come more with the digital euro, besides the point around geopolitical control and sovereignty, around currency and monetary policy as well. And that's where I think the combination of the regulators' view, the institutional view, and the private sectors have to be combined, and that's where I think cooperation has to come into place. For sure, at the infrastructure, networking, technology solutions level, as I think Javier has summarized very well. I mean, nothing else to add on the characteristics that have been already detailed. At the same time, I really believe that we should work together in assessing what are the use cases, what are the key benefits. And this is something that has to come from the private sectors as well, together with the institutions, because that's the private sector that is investing in technology, is close to customers, is working with banks, is day by day enjoying and suffering the life of the market. When I personally think, at least about the three major categories of benefits that may be unique of the digital euros, at the end of the day, I think about three major areas. The one is the area of the use cases that are enabled by the programmable nature of digital currencies. I think this is a very important topic. I think it becomes very complex very soon, as you add technology into the conversation. But the idea of having money, digital money, that behaves differently depending on the context, depending on what is happening, I think is quite exciting. My team, at first time I was asking about this, explain me the power of this, using an example that is very familiar to an Italian. This is the example of a mozzarella traveling from Milan to London, or from Milan to the Nordics, saying, listen, the quality of mozzarella and therefore the value of mozzarella really depends on how it travels, the temperature. Most importantly, the temperature. You may like it or not, but that's the way it works. And therefore, the value of the mozzarella changes depending on how it flies, and therefore the payment may become completely different depending on the temperature, the average temperature, the peak temperature, the lowest temperature, and so on and so forth. But definitely looking into these programmable money use cases, I believe is super key. Also because if we don't do it with the digital euro, other cryptocurrencies may be doing it, other central bank digital currencies may be able to do it, and therefore I think the digital euro must be competitive in that space. A second area is the one of digital inclusion. I think this is a super topic. I really believe this is a super topic, and I think it's absolutely right for European institutions, for European authorities to put it at the center of the development of the digital euro, and is so much in line with everything else we're trying to do in Europe. At the same time, I really believe we need to ask ourselves exactly what does it mean, because, for example, I think when it comes to providing digital payments methods for free to citizens, this is something that the market is already enabling, is already allowing. I have 4 daughters, the youngest being 12, and my 12-year daughter is actually paying anywhere, physical, online, exchanging money with her daughters and her friends digitally, through an app. It is, in the case is an Nexi app, but there are so many out there that there's zero cost for her and is incredibly easy to be used. She went through Know Your Customer, she went through the authorization of the parents, and so on and so forth. So what else? I'm sure there are many other things we can do with the digital euro. but in terms of financial inclusions. And last but not least, I think there is the theme around privacy, transparency, traceability. And I personally believe it's a super important topic, but it's also a topic that requires a lot of political debate. And it's going to be, I think, interesting because there are trade-offs that are very, very clear. We know that people like cash also because some people like cash also because has certain characteristics versus digital payments. Where do we position the digital euro in this space? And this is truly nothing to do with technology, nothing to do with the private sector. This is a real political, super important debate. And by the way, it's going to be interesting to see the different views from the different pan-European countries. Last but not least, I think the technology debate is super important. I like the idea of creating interoperability and leveraging different investments that have been done around the payments ecosystem, from the TIPS to the private instant payment clearing houses to the other technologies. I think at the same time, it's really important to start from those use cases, because it's really important that whatever technological approach is chosen is able to deliver something new and something different to the private citizen. So in a nutshell, very good to accelerate the conversation and discussion around the digital euro. It's really important to push for cooperation in between the institutional side, the regulatory side of this, and the private sector.
That's great. Thank you very much for that, Paolo. And I know, having had the mozzarella in Amalfi, which is the best mozzarella I've ever had, I don't think I've ever seen it travel anywhere outside Amalfi, so I'm not even sure in Rome. So I love that analog. Listen, we've got exactly 8 minutes left. I'm going to start off with some rapid fire questions here. And I think the rules of these are, let's go a bit casual. You don't have to answer this on behalf of your organization, which is quite often what SEC commissioners use when I'm speaking to them. They answer things personally rather than on behalf of the SEC or the regulator. But feel free to answer them as you feel is appropriate. And Paolo, I'm going to start with you with this. As a question to all three of you. One, are we expecting the ECB to proceed with investigation in July? Yes or no?
I think it would be good to move on.
Right. Definitely. So you would want a yes, but are we expecting a yes?
I don't know. It's not for me, I think.
Okay. Javier?
Yes, I think this will continue. It's investigation. It's, as I said, it's normal that central banks look at this topic and they put all their means behind it. And I think it's what they've always done, and the ECB has always done it on many topics. And this one, they're doing it well, as I said. But of course, Ulrich is the best place to say it.
Yeah, I will not. You said I should give my personal view, but the council will decide. And the probability of a positive votum, I don't know, listening to speeches of decision makers is not very low, I would say, at least.
Yeah, indeed. I've got an audience question here from Florian Lofman. And how does the Cbdc fit in with the ECB's retail payment strategy? Ulrich, can I direct that to you, please?
Yeah, indeed, that's something we are discussing with the Commission. We have established a contact group, ECB Commission, where we established work streams, and one work stream is indeed about that. So the retail payment strategy, in terms of, has general, objectives like also inclusion and, having a European stakeholders being somewhat successful, at least in this market, etc. Now comes the digital euro on top, and it should be consistent. At least, the objectives of getting European stakeholders back into this market is consistent. We believe that the market is big enough to have both private solutions, European solutions, be more successful in retail payments and the digital euro coming. And then you will also find many objectives, both in the strategy documents published by the Commission and the ECB, and the digital euro report. So I think it is consistent, but the details have to be worked out where there is real interaction. Like, for example, the fact that we enter a market where we want to see, which we want to see develop itself also with private solutions. So that creates some interesting interaction, of course, and we have to work it out.
Well, and I think you did an excellent job at outlining the priorities of the scope of a CBDC, in that though there's a very reliable payment structure in many of the jurisdictions, getting that to work in a cross-border way, and certainly using it with the central bank's balance sheet is a great opportunity here. Javier, a question for you. And I guess, really on this payment or account-based architecture that we've got in the current ecosystem, how important is jurisdictional interoperability from a systems or from an architectural perspective with, for example, the existing payments infrastructure?
Well, it is fundamental. It is crucial, and that's why I was pleased to hear Danuta referring to that. If you take a step back, how international payments work today is precisely an interlinking of domestic clearing systems. And how is that done? This is done through financial institutions that are the entry point of these domestic infrastructures. Whether these domestic infrastructures are RTGS systems, ACH systems, real-time payment systems, all of the above. By the way, the ECB has been running successfully over the past couple of decades, and these need to interoperate with other domestic systems similar to the ones at the ECB. Take FedWire, real-time payments in the TCH in the US, faster payments in the UK, AUMPP in Australia. So the banks are the entry points into these systems. The banks provide connectivity, they manage the FX, they do all of the controls, or in the regulatory environment in terms of KYC, AML, sanctions, managing liquidity, and that is the typical role that we need to play to make sure that interoperability happens. So whether we move into, we stay in fiat, digital fiat, or any other sort of digital currency, the same model applies. So all the innovations internally will need to interoperate with other innovations domestically in other markets. So the Chinese, with the Europeans, with the Americans, and so forth. And that role of an intermediary that is played today by correspondent banks is likely to be played again, or to continue to be played the same way. What we do at the infrastructure level is to make sure that the platform that we have today and that we evolve now with our new digital platform is able to cater for all kind of assets, whether it is, as I said, fiat or digital currencies. But that is the model that needs to be the foundation for all of the front-end innovation. Because when we talk to the public, they probably get lost with all of these complexities. But all of these complexities and these controls are paramount to provide front-end innovation in terms of apps, front-end channels, and so forth that have all of the controls in place at the back end.
Thank you very much, Javier. And this is a man after my own heart, Patrick Lemens, portfolio manager at Global FinTech and Finance, who's said, Paolo, can you take half a minute and explain what the real benefits of a Euro CBDC would be for consumers?
Well, that's really the challenge that I was raising before. I think my example of the mozzarella is a very basic one, but it's also quite telling. But I think that's the exploration that we have to do together, because I really believe that answering to that question is incredibly important, and is also important to have the private sector investing into the innovation around digital euro. I think at the end of the day, we should see it as a new platform enabling new innovation, and therefore we should really attract and gather the best innovators in Europe, ideally to begin with, and test them. From my company point of view, this is what we are doing. We are starting to experiment with the digital currencies that are available today, that are the Bitcoins of this world, obviously under regulated approaches on the issuing side with wallets. In Austria, we're starting to accept Bitcoin-based payments on the acquiring side in store. We are experimenting with the Italian central bank and the banking association around blockchain applications behind all of this. I think we need to start a new wave of experimentation, ideally under the umbrella of the efforts of the ECB, and learn together.
Can I comment on this, Lawrence?
What's that? Sorry?
Can I comment on what Paolo is saying?
Just very quickly, in 10 seconds, if you can.
Yeah, it's a very interesting philosophical point. No, Paolo is saying retail payments are perfectly efficient. We don't need a digital euro. Let's have the digital euro do something new. But, I would say, people should have the option to use a public means of payment in addition to private solutions. And this is on what they have been asked, what they demand to do and what is technically feasible. And the problem is that, the industry has delivered to satisfy the actual demands of citizens. So if we come and say, this is all fine and digital euro should be about something different, then we enter a field where demand is unclear and technology is unclear. And that's a good philosophical question that you have been raising. I think I would not draw the same conclusions as you, but it's a good question, really.
Well, I love your ideal work. I think if you can just let customers do whatever it is they do today, however they do it, but better, and it's almost not even noticeable to them. If you can offer them a premium, and particularly an inflation or an interest premium for using a CBDC, that'll make you very, very popular. We need to shut this panel down. I'd like to thank all of my panelists, and I have to say we've very cheekily asked the audience a question. Should the ECB proceed with the digital euro, not proceed with just the investigation? And 83% of our delegates have said yes, 17% have said no. So can I thank you very much, panelists? This was an outstanding panel. And thank you very much to our delegates for watching. I'm sorry we've run a bit late, but again, the gravity, I think, of this topic is so big that hopefully you've enjoyed the additional 13 minutes. And certainly thank you very much to CREAB, to Barclays and to the conference organizers for hosting us today.
Thank you, and thank you very much to Lawrence. And I'd like to also add my thanks to Ulrich, to Javier, to Paolo, and of course to Danuta, who was with us earlier. So thank you all very much, and another fascinating panel. Thank you.
Bye.
So as Lawrence has mentioned, we have run just a little bit over time, but lots to cover in that session, as I'm sure you understand. So we are now going to have about a 15-minute or so break, so just 15 minutes or so. And then we're back here on the main stage at 2 o'clock Brussels time for our final session of the day, where we're going to be looking more at the international side of things. So looking at Europe and the emerging new global partnerships. So we have a fascinating discussion with speakers from the Commission, from the UK HM Treasury, and from the US Department of Treasury as well. So we'll be back here with that discussion in just 15 minutes or so. In the meantime, thank you once again to all of our panelists in that session. Thank you to all of you out there for your participation and your questions as well. And as I said, we'll be back here in 15 minutes. Thank you.